Hello, everyone. Welcome back to the Investing Iguana, where we talk about the latest trends and opportunities in the world of tech stocks. I'm your host, Iggy, and today we have a very exciting topic to discuss: Adobe's Q2 earnings and why they are a sign of things to come. Adobe is one of the most well-known and respected software companies in the world, with products like Photoshop, Illustrator, Premiere Pro, and many more. But did you know that Adobe is also a leader in artificial intelligence? That's right, Adobe has been investing heavily in AI for years, and it's paying off big time. In this video, we're going to take a closer look at Adobe's AI strategy, how it's driving growth and innovation, and why it makes Adobe a great buy for long-term investors. Let's get started. First of all, let's talk about Adobe's Q2 results. Adobe reported revenue of $4.816 billion, beating both consensus and guidance across metrics. This represents a 9.8% year-over-year increase, which is impressive considering the challenging macroeconomic environment. The main driver of this growth was the digital media segment, which includes the Creative Cloud and the Document Cloud. This segment grew by 10% year-over-year, reaching $3.84 billion in revenue. The segment outperformed due to increased Adobe.com traffic, growth in newer applications, Acrobat seat expansion, and robust mobile activity. But what really caught my eye was the performance of Adobe's AI-powered products within the digital media segment. Adobe has been developing a suite of AI tools called Firefly, which are designed to help users create amazing content with simple text prompts. For example, you can use Firefly to recolor an image, fill in missing parts of a photo, or generate a new image from scratch. Firefly is powered by generative AI, which means it can create new content that doesn't exist before, based on your input. Firefly is currently available in Photoshop, Beta, Illustrator, Adobe Express, and on the web. Firefly is not only a cool feature for users, but also a smart business move for Adobe. Firefly could significantly expand Adobe's user base by attracting new customers who want to try out AI art generation. It could also increase adoption within its enterprise base by offering more value and functionality to existing customers. And most importantly, it could drive more revenue for Adobe by enabling users to generate additional content on its platform through subscription credits. This means that users who want to use Firefly more often will have to pay more for their subscription plans. Adobe has already seen some positive results from Firefly in Q2. The company reported that Firefly had over 1 million users in beta mode and that it generated over 10 million images in Q2 alone. The company also said that Firefly had a positive impact on user engagement and retention across its products. While AI-driven revenues are expected to be modest in Q4, they are projected to grow significantly thereafter. But Firefly is not the only AI product that Adobe has in its pipeline. The company also has other generative AI offerings, such as Generative Fill and Generative Recolor, which are integrated into its existing products. These tools allow users to edit images with text commands, such as changing the color scheme or filling in gaps. These tools are also designed to drive higher average revenue per user, ARPU, by offering more value and functionality to users. Adobe's AI strategy is not only focused on generative AI, but also on other types of AI that can enhance user experience and productivity. For example, Adobe has Sensei, which is its AI platform that powers features like auto-tagging, face detection, content-aware fill, and more. Sensei helps users save time and effort by automating tedious tasks and providing smart suggestions. Sensei also helps Adobe improve its products by providing insights and feedback from user data. Adobe's investment in AI is not only good for its customers, but also for its competitive advantage. By being one of the first movers in the field of creative generative AI, Adobe has established itself as a leader and innovator in the industry. It has also created a loyal fan base that trusts its products and services. Moreover, Adobe has built a strong moat around its business by creating a network effect that attracts more users and content creators to its platform. However, there are also some challenges and risks that Adobe faces in its AI journey. One of them is the pending acquisition of Figma, a browser-based design and collaboration tool that competes with Adobe XD. The deal, which is valued at around $20 billion, is currently under review by regulators. This could be a potential risk factor for Adobe, given the increasing scrutiny of large acquisitions by antitrust authorities. Despite this, we remain optimistic, considering Figma's immense potential to expand Adobe's footprint in browser-based design and collaboration. The acquisition could prove to be strategically significant, albeit dilutive initially. Another challenge that Adobe faces is the ethical and social implications of AI. As AI becomes more powerful and ubiquitous, it also raises questions about its impact on human creativity, privacy, and security. For example, how can we ensure that AI-generated content is not used for malicious purposes, such as misinformation or fraud? How can we protect the intellectual property rights of content creators and users? How can we foster a culture of responsible and ethical AI use among the creative community? Adobe is aware of these challenges and has been taking steps to address them. The company has been developing creative generative AI responsibly, with creators at the center. Its mission is to give creators every advantage, not just creatively, but practically. As Firefly evolves, the company will continue to work closely with the creative community to build technology that supports and improves the creative process. The company has also been transparent and proactive in communicating its AI vision and values to its stakeholders. It has published a set of AI principles that guide its AI development and use. These principles include trustworthiness, transparency, fairness, accountability, and respect. We think that Adobe's current valuation is attractive, given its growth prospects and potential. The stock is trading at around $495 per share, with a market cap of around $227 billion. It has a forward P/E ratio of around 47x, which is reasonable compared to its peers in the software industry. It also has a healthy balance sheet, with over $6 billion in cash and equivalents, and a low debt-to-equity ratio of 0.3x. We think that Adobe's stock price could reach $550 by the end of this year, based on our discounted cash flow analysis. This implies an 11% upside potential from the current level. We also think that Adobe's stock price could reach $700 by the end of 2024, based on our long-term growth projections. This implies a 41% upside potential from the current level. Of course, there are some risks involved in investing in Adobe. The stock price could fluctuate due to market volatility, macroeconomic factors, competitive pressures, regulatory uncertainties, or other unforeseen events. The company could also face some challenges in integrating Figma into its business or in scaling up its AI products and services. The company could also face some backlash from users or regulators over its AI practices or policies. Therefore, we advise investors to do their own research and due diligence before investing in Adobe or any other stock. We also advise investors to diversify their portfolio and invest only what they can afford to lose. That's all for today's video. I hope you enjoyed it and learned something new. If you did, please hit the like button and subscribe to our channel for more videos like this one. And don't forget to hit the bell icon to get notified whenever we post a new video. Thank you for watching the Investing Iguana, and I'll see you next time.